Today, we're going to start the session with a conversation with Deepak Jeevankumar, Managing Director of Dell Technologies Capital. Deepak and I met recently at a panel, and I invited him to the show. Deepak, welcome.
Yeah, thank you, Shramana, for the opportunity. Great to be speaking on your roundtable here.
So let's get you introduced to our audience. Tell us a bit about what your background is, as well as what is the current focus of Dell Technologies Capital.
Great. So I have been with Dell Technologies Capital for 3 years. I grew up in India in a family of doctors. I'm the first non-doctor in 3 generations. I decided to become a computer engineer, worked for Sun Microsystems, then moved into the venture capital world about 10 years ago in a firm called General Catalyst Partners. And I have been in Dell Technologies Capital for 3 years. Shramana, can you hear me? I'm just having some.
What is the size? Yes, we can hear you fine, Deepak.
Okay, excellent.
What
excellent.
is the size of the fund?
Yes, so Dell Technologies Capital is the investment arm for Dell Technologies and all the companies under Michael Dell, including Dell, EMC, VMware, RSA, SecureWorks, Pivotal, which is now part of VMware. We invest about $100 million a year. We have been in business for about 8 years. And in 8 years, we have made about 100 investments. 40 of those have already been acquired and 5 have gone public. I mean, some of the well-known names that you are aware of, including Arista Networks, MongoDB, Nutanix, DocuSign. And we invest about $100 million a year, mostly in Series A and Series B, sometimes earlier and sometimes later. Yeah, investment check size goes from $5 million to $20 million, depending on the stage of the company. We mostly lead or co-lead the rounds. And the investment focus areas are anything in enterprise infrastructure, from cybersecurity, cloud infrastructure, developer tools, to semiconductor chips, storage, networking. And sometimes we do a little bit in the middleware and application layers as well.
And Deepak, can you elaborate a bit on when you do Series A investments, what do you want to see in terms of proof points? Or do you have a particular, if you're doing, let's say, a SaaS deal, do you have a particular MRR or ARR that you are targeting? How do you benchmark those deals?
Yeah, so it's a great question. And I think enterprise investing probably has the highest variance in what we look for in Series A. In consumer investing, it's probably, it's usually some version of consumer traction, be it number of users, number of daily active, monthly active users, and so on. In enterprise investing, it varies. So if it's like a semiconductor company where you're creating chips, you probably are not going to have any revenue when you take the Series A investment. You're probably not even built or designed the chip. So then we look at the background of people, of the founders, whether they have whether they have actually designed and shipped chips before, and why they are the right people equipped to do this, because we are going to give them like somewhere between $10 to $20 million between the A and B without having any revenue. On the other hand, if it is like an open source company, and where you're creating a company around an open source project, we look at open source community traction. I think one of the metrics used today is number of GitHub stars. Then another metric uses number of downloads and how many people are actively using the project. So usually, for open source companies end up raising a seed round first and then come to a Series A. And by Series A, at least part of the project is in the market, and you are having somewhere between 100 to 1,000 GitHub stars. The other piece of the metrics is not just like how many stars you have, but can you actually build a big company out of this, and why are you the most well equipped to build a big company? And that's where we look for what we call as authentic entrepreneurs. Why are you the person who's well equipped to create this product? Do you have an authentic story behind this? so then if we go to cybersecurity companies, there are some cybersecurity products which take a long time to build, and so we don't look for revenues for those. But there are many cybersecurity products which you can actually build with seed capital. And typically we look for between half a million to 50K, like 50K to half a million in revenue from customers there. If it is SMB focused, then it's probably lower, but we want to see more customers. If it's enterprise focused, big enterprise focused, then we are looking for a handful of customers or design partners, and them saying, hey, we are using this in production, or we are going to put this product into production soon. Now, hopefully that answers your question, but this is one of the challenges of enterprise investing. There is no one bar, unfortunately, that we can look at unlike consumer investing.
Yeah, well, and also I think, we make a distinction between fat startups and lean startups, and some enterprise products tend to be fat startups. And cybersecurity is a very good example of an area where some startups tend to be fat startups, and it takes time to build the product, and the enterprise sales cycles are very long. Cybersecurity sales cycles can be 6 months. So, what we have actually in our portfolio right now, we have some excellent companies that have built very interesting cybersecurity products that, in one case, it's pre-revenue because it's negotiating these very long sales cycle deals. In another case, actually, since you and I met recently at a Indian entrepreneur event, Tamil entrepreneur event, we are very active in the India-US corridor. So in this other case, we have another cybersecurity company that has actually very solid customers already in the Indian market, and they have a good pipeline that will get them to $1 million in revenue in the next 6 to 9 months. That pipeline exists, but those are Indian customers. They don't necessarily have US customers yet, and they're looking for funding to come to the US. So these are all, as you said, enterprise investing is diverse, and these are all scenarios that are coming up in our practice.
No, thank you.
So let's talk about geography, since we just started touching upon that. Tell us where you're comfortable investing in.
Yeah, so we do invest globally, but not equally in all countries. There are some historical reasons and some practical reasons. One of the things is, venture capital is a very bespoke business. It's not easily scalable. It's not giving money and going to bed after that. So we have to we are active investors. We take board seats. We lead and co-lead rounds. So we need to be in a place where we can help the company. And it's a huge determinant. So we have a team in Palo Alto. We have one of our managing directors in Boston. We have a couple of people in Israel. So we mostly invest in the U.S. and Israel. And Israel, as you know, is a pretty big ecosystem for cybersecurity and some enterprise entrepreneurship innovation. There's been a book from the Startup Nation. We also made a few investments in the UK. About 3 years ago, we invested in this AI chip company called as GraphCore that came out of some of the universities and research centers in the UK. And they are basically building a much faster version for an AI chip that can hopefully create another quantum leap in deep learning. This is a very hardcore enterprise infrastructure company, and we found them in the UK.
Mm-hmm. And talk a little bit about some other portfolio companies that are significant and are representative of your investment thesis. And as you do that, help us understand how you encountered them, what did they have by way of proof points, and what is it about those companies that attracted you enough to make those investments? So what I'm trying to get to is help our audience understand your thought process around evaluating investments.
Yeah, no, definitely. So I think there are a few ways to approach this question. So let me take a couple of different options. So one is how do we source deals? So sourcing deals comes from trusted network that we have from angel investors, other entrepreneurs. and also customers. So we have a strong network of CIOs and CISOs and chief information officers and chief information security officers of Fortune 500 companies, and we keep polling them very frequently on what are the new products that you've come across, and have you come across any interesting entrepreneurs who have come and pitched to you recently? Because many good entrepreneurs go and find customers first before they raise money, or design partners first. So I think these are the three sources. And then there's another source, what I would call as serendipity, and this includes we very frequently scan the rising projects in GitHub for open source companies. We have systems in place to understand if there are second-time entrepreneurs who are now part of big companies because the first companies have been acquired. Now they're coming out to start a second company. We invest both in first-time and second-time entrepreneurs. Both are tricky in their own ways, and we have had equal success with first-time and second-time entrepreneurs. Like Arista Networks was second-time entrepreneurs and serial entrepreneurs. So was Zscaler. Then a lot of our recent companies which have been acquired. So one of our companies in cybersecurity space called RiskRecon was acquired by MasterCard. That was first-time entrepreneur, and we heard of RiskRecon through an angel investor in cybersecurity and through one of the top 5 banks which were using them. So the thought process once we hear about startups is, one, are you the first question we ask is a market question. Are you part of the future of the world story or past of the world story? And that is very important because future means growth. If you look at like for example, I think the future is multi-cloud, which includes hybrid cloud. So we like startups that have a strong multi-cloud or hybrid cloud philosophy. Then how are you securing some of these changes happening with new hardware, new clouds? And that's a cybersecurity thesis. In cybersecurity, we look at category transformation and category creation. So are you part of category creation or category transformation, where you're taking an existing spend, but you're building a far better product? Category creation is like there's nobody spending money for that problem today, but it's becoming a bigger and bigger problem. Like cloud security became a huge problem. We have a good fortune of investing in multiple cloud security companies that have done well. Like example, Twistlock, which rode the container and cloud wave. So as people started using containers, they needed to secure containers. And Twistlock got acquired by Palo Alto Networks for $400 million plus recently. Another example of that is we are investors in this company called Netscope, which is securing SaaS applications. That's where they started. Now they do far more than that. We are investors in this company called Adalom, which has been acquired by Microsoft, and they also secure SaaS applications. Now it's a core part of Azure security. And then we invested in a company called Redlock, which secured AWS as part of Palo Alto Networks now. So we look for what I would call a secular trend in different parts of IT and see if cyber would play a part of it. That's one investment thesis we have in cyber. Then the other part is the people. Why should we invest in a certain set of people? You can invest in so many sectors, but we need to pick the right teams to ride on a disruptive wave. And I think the few things we look for, one is entrepreneurs need to be very, very intellectually curious. Then 2, they need to cut through all parts of red tape that is available that's in this world. There's more red tape gets created always. 3, they need to be great recruiters. 4, they need to be very authentic. One of the hardest challenges about building a startup is scaling, but there's so many things you need to scale. You need to scale sales, you need to scale leadership, you need to scale culture, but you also need to scale authenticity. I'm a big believer in finding entrepreneurs who can scale authenticity and scale culture. So it's not sufficient for the entrepreneurs themselves to be authentic, but they should be able to recruit people who are mission-driven like them and who are as motivated and as authentic as them. And because they cannot be there closing every deal. The salespeople who work for them also need to be authentic. The second level, third level leadership under them also needs to be very authentic and very motivated. So I think great entrepreneurs can recruit well. You're recruiting investors, you're recruiting customers, you're recruiting employees and co-workers. mean, these are some generic comments, but hopefully I answered your questions, Ramana.
Actually, I have a follow-on question. You did answer the question, and it just triggers a different question in my head, is when you are doing a Series A round, how much of the team do you want to see completed?
So I think there's a short-term view and a long-term view to that. The short-term view is we want to see enough of the team that can take it to the Series B. That is the short-term view. And the long-term view is, do you have a plan in place to actually recruit the right leadership for a big company? So, for example, in most enterprise companies, I won't speak of consumer companies, for most enterprise companies, half the time we don't need a VP of product for Series A because the founders are the product leaders. Then we might not need a VP of finance because we can use the part-time CFO, and there's so many very good part-time CFO services. We might not even need a VP of engineering if the engineering team is small, but usually like a VP of engineering comes in between Series A and Series B. We definitely need the founders, and we definitely need somebody who can sell the product. Sometimes the founders are very good in selling, so that's great. If not, we would really encourage them to hire like 1 or 2 startup salespeople. And there are very few good ones who can actually go and walk into one of the top 5 banks, top 5 media companies, or pharma companies, and pitch a product and get a deal done. However, if the enterprise product is more on the SMB or mid-market side, we like to see somebody with growth hacking abilities. Who can look into the marketing, who can look at different kinds of creating pipeline, and keep the cost of customer acquisition low, because then your ASPs are hundreds of dollars to thousands of dollars. It's not hundreds of thousands of dollars. So I would say product thinking in the founders. They like to see some kind of sales or growth hacking, depending on which part of the stack you play in, whether it's mid-market or Fortune 500. Then enough number of engineers who can actually build the product. So these are bare minimum. And sometimes, some companies have achieved a lot on seed capital because now seed rounds have become $4 or $5 million in some cases.
Yeah.
They achieve a lot on seed capital. So in that case, we would look for little bit of more scaling people, like getting a VP of product or getting a VP of engineering to help scale some of the questions. And I think I think most Series A startups do not have complete teams in terms of the leadership, and I don't think it is right for us to expect it because I do believe that there's some basic skills of running, especially first-time entrepreneurs, that the founders need to learn themselves. So I am a big believer, if you're doing enterprise sales and you've never done that, if you're the founder, go close the first 2 customers yourself, and then go and hire a salesperson.
Yeah, that's kind of where I am also. It's like the first few customers in a, let's say, a cybersecurity startup, I don't think anybody other than the founder who's the product visionary can actually close those deals. It's very difficult to get somebody from the outside to come and sell that deal because it's too soon. The positioning points have not been figured out yet, and only a founder who has deep enough knowledge of the product and the space and everything can position on the fly. They can have a conversation that is deep enough and be able to position on the fly on the issues. No VP of sales or no salesperson will be able to do that.
I agree. And that the authenticity in a founder's talk can't be repeated by anybody else.
Yeah. Okay. All right. So let's talk about a couple more case studies of companies that you've invested in that you're particularly excited about, and what do we learn from that? What do we learn about trends? That's kind of where I want to lead this conversation is in the enterprise, where are we going?
Yeah. So I think I mentioned briefly about multi-cloud and how does an enterprise customer work in a world where you have your private cloud infrastructure, AWS, Microsoft Azure, GCP. So that we have made many bets on that. On the security side, we bet on a company called RedLock, which provides continuous security for AWS, Azure, and GCP. Now it's part of Palo Alto Networks. the more important thing about multi-cloud is it's easy to move applications, but it's very hard to move data around. And so we have made a few bets in that line of thinking. So one is a company called Min.io, Min.io, and the founder is a serial entrepreneur. He sold a company to Red Hat called Gluster before this, and Gluster was one of the first open source storage systems. And what the two founders, Garima and AB, are doing with Min.io is basically creating the equivalent of Amazon S3 object storage for private clouds, for IoT devices, for embedded devices, for laptops. So when a developer is used to working on Amazon S3, he or she can get exactly the same experience, whether they're working on the laptop, whether they're working on Azure, whether they're working on Google or your private cloud, or in some kind of a Raspberry Pi or embedded device. And this is actually one of the fastest growing open source projects of the last 2 to 3 years. They have more than 300 million Docker pulls, which is like one measure of open source downloads.
Yeah.
And many big enterprises are using them. And we like the story of the entrepreneurs really well because they knew how to build the open source community. They knew how to build storage products, and they are very authentic. So Min.io is an example of a company that's in the multi-cloud, I would say, storage layer that we invested in. Another one in a different part of storage layer is a company called Yugabyte. Yugabyte was created by the people who led the data infrastructure team for Facebook. So that the products that they created inside Facebook, are the ones that power Messenger and Newsfeed and others, and they had contributed to many open source projects like Cassandra and HBase before. So they've taken their life's work at Facebook, and before that they were at Oracle, to create a database that can work across multiple clouds. So you can run it's a PostgreSQL compliant database, so it's fully SQL compliant and ACID compliant. And you could run this database with one master in a public cloud like AWS or Azure, another master in a private cloud, and your data will be available to applications wherever they are. So another way to look at it is that it's democratizing access to data in a multi-cloud world. So that's a pretty big theme of investing for us. Another theme of investing is we have been tracking what is happening in the container Kubernetes world quite closely. And it's as we all know, it's a very, very big trend in enterprise. Now, so Google created the Kubernetes project, and that created like a huge wave around Kubernetes, and many big enterprises are using Kubernetes. But now, how do you do the network and security layers on top of Kubernetes? So once you start using containers and Kubernetes, how do you make the networking and security layers as dynamic as the compute layers? And Google had created this project called Istio, and a couple of the early contributors to Istio came out of Google and created this company called Tetrate, and we had invested in them. And they are bringing the concepts of dynamic networks and security. And the industry name for this project, for this initiative, is called Service Mesh. And they're bringing whatever Google has created in the Istio open source project and making it available in different clouds and for different enterprises. So that's another example. We are still very big believers in IoT and embedded security. One of our companies has already been acquired by Palo Alto Networks. It's a company called ZincBox. And
Sorry, one question, just to interrupt you for 1 second. One of the themes I'm hearing quite a bit is storage. Now, what triggers in my head is how much of the channel access are you able to open up through your, relationships and your other companies within the Dell world?
Yeah, so I think there are some places where we can open up. Like, for example, we had invested in a cybersecurity company called Cylance. Dell was reselling Cylance for quite a bit, and then it got acquired by BlackBerry. Then we had opened up Dell's. So Dell's one part of Dell has now a relationship with Netscope, and they are jointly going to market. A couple of our companies, like in the security space, RiskLens and RiskRecon, have joined go-to-market initiatives with RSA, and this is all public knowledge. So I think it's a case-by-case basis. We can help access, we can help open up access, but we also help introduce startups to customers on a case-by-case basis through our personal networks and through the corporate network of Dell. So I would say there is no one template that works for every company, and there are some companies we can help more than we can help others.
Sure, of course. All right. Well, that gives us an overview into what you're doing at Dell Technologies Capital. Let's switch to the entrepreneur pitch session. I understand that you're going to stay for a bit and talk to the entrepreneur, yeah?
Yes, I will be able to stay on for like another 15 to 20 minutes, and I'll be on the phone.
All right, great.
Thank you, Samana, for the opportunity. It was really an honor to be on your podcast.
It's a pleasure. Very nice to hear your thoughts, and they make a lot of sense. So
we are all learning together.